Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday, the 13th of July. Well, the big news has got to be today the record high prices for gold. We've been bullish on this market, as you know, and we believe the longer term that the gold market is going to make its highs towards the end of Q3. We've been saying that for quite some time. You know, today's action certainly confirms that this market is moving from a very powerful energy field. If you've watched our earlier videos, you know we've talked about these energy fields and how important they are to these markets. Well, we've seen the market move out of that energy field, and we'll see the market go higher. The silver followed suit, but has not made an all-time high. But however, percentage-wise, when these markets go up, at least in the metals, the silver outperforms gold percentage-wise in gains. So watch that very carefully. You know, the rally in the equity market is not so unexpected. We thought we'd see a bump, as we described in our previous earlier videos. We expect that the current rally in the S&P will run out of steam right around the 1333 to 1338 level. We also suspect that the market is building the right shoulder of a massive head and shoulders top, but more on that later when we go to the chart. It seems hard to believe that the precious metals and the equity markets are all going up at the same time, but that's what's happening in the markets right now. So let's go to the markets and let's take a look at what we're seeing in the S&P 500. Okay, so I'll put my telestrator on and we'll just show you where we are. So we talked about this yesterday in our report. We said here's the highs we talked about, the 50-week cycle highs. We said the market came down, has a little bounce, comes down, has a little bounce, and that's where we are right now. It comes down, has a little bounce. I would think that we could possibly see this even go through to Thursday and Friday possibly, but I think next week we'll start to see the market roll over. But we'll see. Our indicators are sort of mixed. We still have our long-term monthly trade triangles positive and the intermediate positive. We need to see something change here, which we haven't seen. And as always, you've got two lines in the sand here. You have this line right here, which is 1250, and then you have this line here, which is the 200-day moving average, and that's right around, I think, right around 1275. So if we see the market go below 1275, that's going to be a tip-off for a lot of professional traders as well as technicians, but 1250 is the real trigger point. If we go through there, and please watch this level very carefully, we're going to have a massive move in the market. So let's see what happens, and let's watch the market very carefully. So let's clear everything off the screen. I'm going to go to my portfolio manager, and I want to show you some of the this is the SPY. This is the ETF equivalent of the S&P 500 cash, and as you can see, it's very closely in terms of 1.2%, 1.23%, 85 on our scorecard. Tracks very, very well. Next market up is silver. Silver, it's up 5%. As remember, we talked about gold is only up about 1%, but silver's up 5%. It's plus 100, and we've been talking about this market, this being an energy field. You look at just some of our other videos, you'll see, but we felt this was a very strong energy field, and it looks like it's proven to be somewhat true so far. This is a key level to get over in this market. If we close over these levels, I think then we'll see we'll definitely look to challenge these highs around 49 to 50. But for the most part, it's a very strong upward move. Let's see how things shape up tomorrow in this market, but it looks like it's been well bid, well traded on the upside, lots of volume, which you want to see on a breakout. And I think some part of it is to do with the, obviously, Bernanke's testimony on the Hill today. So let's take everything off the screen and go to our portfolio manager again. Here again, we've got a market, the SLV, which tracks silver very closely. You can see it's up 5.14%, 4.91% here. But again, it's very, very close. Both plus 100 means a strong upward trend in these markets, and I think we'll see them perform. May see a little bit of profit taking coming in, but I think we'll still see them perform well. Next market, it's gold. Gold, we've got the equivalent of the gold ETF, which is GLD. Very liquid, very good market to trade. And here we are, we're up 1.22% and up 1.08% in the ETF. So again, it's a very, very good market to trade. And let me just clear this off the screen because I just left my indicator there. And here we are. So double click here, and as you can see, we've talked about this energy field in earlier videos. It's no surprise, and we are basically out. Boom, we're off to the races. So we could see this market have a very strong sustained trend, much like we're seeing here, and much like we're seeing here. So we're not just going up for a day or two, but up for several weeks, as much as in this case up maybe a whole month, let's say 6 weeks, 5 to 6 weeks. And here you're talking somewhere about the same, maybe a little longer, maybe about 8 weeks. So we could see this market end of July, August, end of September, end of Q3. We could see this market on its high. So let's watch that very carefully, but you should be long. Our trade triangles are all positive. Boom, boom, boom. You're above the 200-day moving average. Everything's a go on this market. So let's take everything off the screen and go to our next market. Then the next market we'll be talking about is crude oil. Now, crude oil's had a pretty good day today, and there's also an ETF called USO that you can trade, and you can see we're up, and the ETF is up 2.13%, and we're up about 1.5%. 98.88 last, 99.21 was the high. The key here is 99.50. If we go over that, then you'll see a lot more sparks and fireworks to the upside. So let's just take a quick peek at that. We go to 55, which means it's trading range, and you can see how this market is trading. This is the level right here, this area that I want to see the market clear before we get enthusiastic on the upside. So it's right here, this level here. We can get over that level. We're 98.87. It's about another 60 points higher. That's certainly something to watch, but you can see we had the pullback. This is about a 62% Fibonacci retracement. Boom, we're back up. Again, if we see this market go over here, then I think we're in good shape. It would appear as though the downtrend line, a downward momentum, just a simple trend line, I'll draw this right here, is broken out, and we may be making a turn. The fact that it's come so far into this space here, which I consider to be resistance, is, I would see as a positive sign. But let's see what happens. We need to turn the weekly and the monthly positive before we get super bullish on this market. So let's take everything off the screen again. Clear the screen, go back to our portfolio manager, and look at our next market. And the next market we're going to look at is the dollar index, and we also have something that tracks the euro, which is the FXE, which is the ETF. That's up. You can see it's an inverse relationship. So when the dollar index is down, the FXE will be up. So it's a little more than that. So you'll see it's 75 plus 75 minus 90, which is about where we should be. So let's just double click on here, and you can see we're seeing a pullback after yesterday's buy on the monthly trade triangle. So I think we want to watch this market very carefully as well. So let's just go back to our portfolio manager. You can go back very easily just by clicking here, and that's going to be the FXE, which we talked about. And you can go back to our next market, which is the Reuters Jeffries CRB index. We've been talking about this market going higher. We've of course seen a turn here. We've gone from pretty much a minus 90 to a plus 70, and we have just seen a smidgen of a turn. And here's what I'm looking at on this index. So you're seeing basically this is the 200-day moving average. That's the line right here. So we're above that, meaning the trend is still longer term positive. Our intermediate term trend on the weeklies is positive from 346.95. The market's 349.98, so we've got a little bit of juice on that. And also with the daily as well, from the same level. This is the key right here, 335.10. We need to see this market break over this level. I would say probably here, initially around the 350, 355, I believe, and we'll see this. We'll see how this works. But generally speaking, the 352 is the resistance. If we get over there, we'll have a lot more upward momentum in this market. So lots going on in the markets, but be sure if the index, by the way, and I'll just put this index on. Let me clear everything off the screen first of all. And this is why you're going to love trade triangles. These are dynamically placed, by the way. So you see the buy signal today at 346.95. That came in automatically on the chart. You didn't have to do anything. All you had to have is your indicators up here turned on. That's all. It happens dynamically. But hey, lots going on. If you haven't, don't forget to tune into our show tonight, 5 p.m. Eastern Time for the Market Club TV show. When you watch tonight, you'll also have another opportunity to enter to win a 1-year membership to Market Club. So don't miss out. Watch the show that everyone's talking about. Get your questions in. Email us. We'll love to hear from you. And thanks for stopping by today. Every success in the market, and watch those metal markets.